Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. Wanting to own what others don't have and wanting to own it before them. These are the two things that are driving people to buy unlisted stocks. A friend of mine once convinced me to buy a company. His argument was that this company compares very well with other companies which are already listed. So he says the unlisted company is definitely more value compared to the listed company. Now the listed stock was extremely overvalued. In relation to an extremely overvalued stock, the unlisted stock was available at an overvalued price. I didn't want to tell my friend that it's a bad idea. So I just told him, okay, I'll put a small sum of money and let's see where it goes. But socially, when I meet other peers, especially people who run family offices for their own family, those who are ultra HNIs, who have wealth management relationships, all of them have dipped in very heavily into unlisted stocks. I believe that the craze for unlisted stocks has been primarily triggered by what has happened in the shares of the National Stock Exchange over the last 5 years. Because the returns have been so good even after the recent correction, most people think that it's important to have a very good exposure to unlisted shares. The craze that we see reflecting in IPO oversubscription is also forcing people to think that let me own these companies before they come public, because at the time of coming public I don't stand a chance of buying them. So there is an IPO FOMO that is also driving people to buying unlisted companies. But there have been at least 3 instances in recent times where people have bought stocks at a significantly higher valuation than the IPO price and even the listing price. The first one is Paytm. You all know what happened in Paytm. Paytm has been one of the biggest disasters in private market trading. People were willing to buy it at any price, and finally the same people were not willing to buy it at any price when the IPO happened, and after the IPO, market became very judgmental about the company. The result is we have seen a value erosion of close to 80 to 85% from the peak price at the market bottom. Today things are a little better. I know a lot of people who bought HDB at significantly higher valuations than the IPO price. There was absolute craze because they thought HDFC pedigreed company can't go wrong. So they overpaid without doing any math on the price at a time when Bajaj Finance was trading at an astronomical valuation. Crazy valuation. So everyone benchmarked with Bajaj Finance valuation, bought HDB Financial, saying that AB NBFC, when it lists, will make a lot of money. The logic was HDFC should get a higher valuation than Bajaj Finance's peak valuation. It's been very sobering for quite a few people. More recently, once again, the mistake happened in a NBFC, Tata Capital, where private markets were seeing the share trade at a very comfortable 4-digit, even as high as 1200. And the IPO is at a far lower valuation. So the problem with private markets is that the investor mostly doesn't have a way of validating the price. So what does he do? He checks around with 3-4 brokers. If all 4 brokers give the same price, he goes to the guy who has offered it to him, who mostly would be a wealth advisor, and says, okay, chalo, we'll buy it. So that craze and craving to have an allocation to unlisted stocks is forcing people to overpay and buy companies and then sit and repent for a very, very long time. Incidentally, all the 3 companies that I have discussed are financials or related to financials. And from the looks of it, valuation excesses in financials in pre-IPO are the ones that stick out like a sore thumb. But I'm sure there are other cases which have not come to light where greedy investors have bought at any price. Fundamentally, in pre-IPO, the mistake most people do is they buy unlisted companies at any price, at whatever price the market makes. So if the market makers gang up and give a high price, everyone is falling for it. And the reason they say this is listing could see the price go far higher. But it is not a given, and all these companies are an example of what you should not do in the pre-IPO market. Going forward, we could see disappointment spread from just these financials to other parts of the market also, because pre-IPO trade is seeing frenzy and unlisted share buying is almost at euphoric levels. Be safe, pay right, and ensure that you are not going to pay far more than what the IPO price will be. Just make sure that your capital is protected and not exposed to the wild swings of the unlisted trade in our markets. Thank you for watching this video.